Okay, today is October 16th. I have some really important updates. I'm going to talk about what the Department of Ed just released on the income driven plans, save and non save plans. The second part of the update is going to be about the lawsuit and the most impacted people when the on ramp to repayment ends. Like, technically, nothing's going to get reported until January of 2025 on your credit report. So I want to talk about the rules around on ramp ending, which just happened at the end of September, and who the most impacted people are. Okay, those are the three topics I'm going to talk about in this video. First and foremost, I'm going to go over the rules that the Department of Ed just released on borrowers who are not entering repayment but are put on administrative forbearance. I want to talk about interest accrual there. Then I'm going to move on to the two other topics. So first and foremost, the Department of Ed released a statement that, number one, it's very political because we have an election coming up, that on average he saved borrowers $4,800 a year while we're on payment pause in interest payments. That's number one. On-ramp ended, which was September 30th, and the administration's very worried that people are going to be at default risk, which is true because about almost 9 million people didn't make payments after the pandemic ended, okay? So they're suggesting, of course, if you qualify for forgiveness, to apply, number one. Number two, if you're not already in an income-driven plan, to consider doing so. Now, here are the very specific rules. For those who applied for income-driven, including save, that your servicer can take up to 60 days. During that 60 days, interest will accrue, okay? During the 60 days initially of forbearance, interest will accrue. However, if you applied for save and the application is not processed within the first 60 days, then you'll be moved from the processing forbearance into a general forbearance in which you will not be required to make payments and interest does not accrue, which means that if it takes more than 60 days to get into save, interest will not accrue. So keep that in mind. Okay. For those who are not in save, servicers should be communicating with you about what your options are within the next couple of weeks. Okay. So if you do not have updated contact information with your student loan servicer, I would do so immediately, especially if you're not in a save plan. If your borrowers we're working with who want to apply for a mortgage, that's the route we suggest, is to get out of save into a non-save plan that's still income driven so that you can get your statements and payments for your mortgage purpose, okay? For those, of course, deferment and forbearance still exists for those who don't have a $0 payment but need a $0 payment for whatever financial reason. They say it's still available. We at LoanSense do not recommend going into voluntary forbearance or deferment just to get zero because it doesn't count towards forgiveness, and it's just pushing off the time in which you have to pay in which interest accumulates. Okay, so unless you're in a dire situation and have no money and can't even afford a $20 payment, then I would not consider that as an option at all because it's just pushing off payments in which interest accumulates. So interest does accrue. So we don't recommend that option. We always recommend income driven. If you have questions about what the best options are for you, we're available at myloansense.com. I have to put that in there. Of course I do. And of course, if you have gone into default prior to the pandemic and you have not made a payment since we've entered repayment, I highly recommend you basically look into rehabilitation, loan rehabilitation, or consolidation because you're at risk of default. If you have questions about that, we can answer that as well at myloansense.com. Our email, if you have any specific questions, you can chat us on our website or hello@myloansense.com. We can help you navigate the process, okay? Because if you do not enroll in consolidation rehabilitation, have not made a payment, and you were in default or you were, you were in default, or you did not make a payment since before the pandemic, then you are at high risk of getting your wages and or paycheck and or federal taxes withheld to make a payment. So it's best that you file the appropriate paperwork that is required so that no wage garnishment happens and or tax withholdings. Okay, I wanted to say that. The administration, of course, is bragging that in January of 2024, there have been more on-time payments than before the pandemic, and that it's a record amount of people being able to make payments. However, there were also millions of people on pause. I'm not quite sure I wholeheartedly believe the statistic the administration is sharing about that. So that's the update from the Department of Ed. The second piece I wanted to talk about was the grace period ending, who's most affected. And then I'm going to go into some of the lawsuit details, okay? So first and foremost, I started the video talking about on-ramp ending September 30th. So the student loan servicers are not going to report anything to the credit bureau probably until, it's not going to be reflected on credit until January of 2025, okay? That's what I want to put out there. So does that mean if you haven't made a payment, you shouldn't make a payment? I would highly suggest that not be the case. If you are required to make a payment, I would make a payment now. If you can't afford it, get help, file the right paperwork, but don't just ignore it and not make a payment, because that's going to hurt your, that's going to hurt you. You're going to be put on a pathway to default. And that's not fun for anybody, okay? So the people who are going to be most hurt, number one, just know those who are required to make a payment who have not, and have not made it since we were required to make a payment, since that was basically October of last year. Even though it hasn't been reported on credit, 9 million people didn't make a payment. People who continue to not make a payment will be in significant risk. Okay, that's pretty obvious. Don't not make a payment just because it's not reported to your credit, because it will eventually be reported and all the missed payments will then be reported and then your credit will be very hurt. You want maybe a few dings at most rather than have an entire 16 months of no payments all of a sudden being reported. That's going to be really harmful to your credit. Okay, that's number one. So people who just have not started paying, okay? The second cohort of people who are really going to be hurt are people who were in default and did not file for fresh start to eliminate missed payments and who continue to not pay. Of course, those people will be very much at risk of being harmed once servicers are required to report to the credit bureaus as well. And lastly, I want to talk about an interesting statistic that baby boomers hold the highest student loan balance, according to Fidelity data, which, by the way, lines up with national data. People who are 35 to 49 hold the largest outstanding debt, and that's because people that are older may not only have their own debt, but they take out for their children as well. According to this Fidelity study I found online, baby boomers, which is after Gen X, so it's baby boomers, Gen X, millennial, Gen Z, right? So the youngest is Gen Z, then millennials, then Gen X, and baby boomers. They say the average baby boomer who borrowed for their child pays a monthly payment of $710, which is for balance of $54,000, almost $55,000. Gen X pays $629 for a balance of $52,000. Millennials pay $590 for a $43,000 balance, and Gen Z pays about $469 for a $29,000 balance. Obviously, the younger Gen Z is more likely just paying for undergrad loans, whereas millennials, Gen X have paid for grad school, and then baby boomers are now including their own education plus paying for their children. So that's how the debt, and by the way, $55,000, frankly, is just paying for one child's education that they put on top of that child's own undergrad debt, right? So for an education, it could be a Gen Z person that has their own payment of $400 plus their parent has a $700 payment. It's crazy, right? So it's really important to get an understanding of how to finance college before college comes to reduce the debt burden post-college, okay? And then to better manage your debt based on, I always say, here's the rule of thumb. Whatever your first year salary is going to be, figure that out after college and don't borrow more than that for all 4 years, or you are going to be significantly financially burdened. That's my rule of thumb. I try to help my children achieve that metric, as in you shouldn't take out more debt than your first year is going to pay you. And if you don't think you're going to get a job that pays much, then I would consider less prestige and a cheaper tuition if they're not going to go into a profession that earns more money. Okay, that's my rule of thumb. Not to knock on, you know, higher value, higher price tag. I don't knock on that if the value is there. But if you know you're going to be a teacher and not make much money, regardless of where you could go to Harvard, if you're going to be a teacher and make 40 grand, then it may not make sense to pay a significantly higher tuition, right? Totally depends on the profession, the experience. Is it worth more, right? As well as if you're a parent and you're going to also finance it, how much willingness is a parent going to take, considering they have their own retirement and their own financial security to think about, right? That is all. If you are interested in me having a talk about rules of thumb of borrowing, let me know in the comments below. Like, share this. I spent my career prior to LoanSense on the college advising side and financial aid side. So I have a ton of insight on that side as well. Happy to share it if people comment that they want it. Last piece I'm going to go into is about the lawsuit. So the lawsuit has now been kicked to a district court in the state of Missouri. Really interesting, because this district court states that they are suing not just on behalf of the state of Missouri, but on behalf of Mohila, because Mohila will lose income if the government forgives loans from the SAVE program. That the loan forgiveness provisions will reduce the fees that Mohila can make, which is based in the state of Missouri. And therefore, they have a privy in this lawsuit to stop the SAVE forgiveness, any forgiveness as a result of enrolling in SAVE from happening. It's extremely, this article, by the way, it's a political article, is saying it's extremely, by the way, I don't just share what the article says, but I'll give my opinion. It says that it's speculative because here's the thing. Mohila is my servicer for my student loans, by the way. If someone is better helped and not goes into default, Mohila lose money when a borrower stops paying, goes into default, they have to collect on them. They make the most money on people who make their on-time payments, who don't call them every day or call them every month even, right? You just make an online payment. They get their monthly servicing fee from you. They don't have to spend customer support dollars. You make an automatic payment. It's super easy. They just process your payment, right? You become a costly borrower when you call them all the time, when you don't make on-time payments, when you need to go through all these methods to make different methods of payments, and then when you ultimately don't make a payment. That's what ends up costing Mohila the most. So in many ways, this article is arguing that no, a person accessing SAVE actually saves them money, and Mohila doesn't actually themselves refuses to respond or actually as an entity participate in the lawsuit, because they've actually asked the federal government to give them less files and less borrowers to manage. So they're actually asking for less cases and less people to handle from the government. So it is speculative if it's really true that Mohila is losing money. And so I don't know if this court case will have a strong standing if they say their primary interest is that they're fighting for Mohila, who's going to lose money, you know, because I'm not sure. It's not that I'm not sure. I'm positive that if you enroll in SAVE and can now get on-time payments and just make a payment, that Mohila ends up saving money, not lose money, okay? I know that based on just seeing what the government's willing to pay for someone who defaults versus someone who makes on-time payments. If you default and they have to pay a collector to go after you, the case is transferred, Mohila loses you entirely, and then they pay these debt collectors. Mohila doesn't want that, because then you lose you as a customer. They rather do, like I said, just make automatic on-time payments. That's where they make the most money. People who are simple, pay when they're supposed to. They don't have to chase them with a whole bunch of documents. Where's your address? All this stuff, right? So I don't think that the case argument on at this district court level is actually strong, and I have a feeling that this case will end up in the Supreme Court because the Department of Ed totally has the authority to create another income-driven plan. So I don't know what legs those that are trying to say SAVE shouldn't exist have to stand on. I just don't think it has any legs. We'll see, though. I'm not a lawyer. This is just my speculation from prior lawsuits when people tried to stop public service loan forgiveness, saying, well, if you forgive loans and you don't make people go through XYZ hoops, and I can't make people work for me for longer because they have to go through XYZ hoops, like, or someone who, they had somebody file with a similar argument. Well, I lose money if you forgive right away, and I lose money, like public service needs to exist in a long and hard fashion because I'm going to lose employees if you don't make them try to get this, even if it's long and arduous. You know, there were arguments like this with people saying, like, it's unfair because I don't get public service loan forgiveness, so it shouldn't exist. That is not a good argument, right? So these financial arguments that I'm going to lose money, or it's not fair because I don't get money and they do, like, these financial arguments don't actually prove harm when someone else gets a benefit and you don't, or someone gets a benefit and the state's trying to sue on their behalf. Like, so far these court cases haven't stood up for why someone has the authority to sue on their behalf. So let's see if that actually flies in court. So those are my updates. Again, sorry, the Department of Ed announcement on what's going to happen with SAVE and non-SAVE loans. If you missed that, go back to the beginning. What happens with interest accrual? I went over that. I went over the most impacted people by the on-ramp into repayment that ended September 30th, ending who are those groups of people. And then lastly, I went over the SAVE lawsuit. If you have any questions, please comment and or ask them below. If you have people with student debt who are curious about this news update, please share it. Have a great day.